Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday video update after the close. Hope everybody had a very beautiful weekend. So in today's markets, guys, we started off the day very well, but everything reversing pretty much at the midpoint of the day and ending red on the day for SPY and QQQ. We did have some green points in the markets in our names of financials and healthcare, which provided some decent rotation, really prevented SPY from crashing through the floor into the mid-afternoon. But QQQ really our loss leader, and that just plays into our theory that we've been having over the past couple of weeks, guys. After big tech earnings, everything has been significantly overbought in your big tech names and also a lot of semiconductor names as well. Daily RSIs are overbought, weekly RSIs are overbought on a lot of those names. So it could just be some time for some potential profit taking in big tech as money rotates into the rest of the market, potentially towards some more value oriented names. So in today's video, guys, we're going to take a look at our CPI predictions for tomorrow. Very big day tomorrow. We're also going to be taking a look at one earnings play that I have provided for you guys in terms of the name of SPGI, S&P Global. They came out with earnings last week. We're going to cover them today. I also wanted to cover waste management today. They were supposed to have earnings after the close, but I've been waiting for the earnings report for over an hour at this point, and it just hasn't come out yet, guys. They have their earnings called tomorrow before the bell. We were expecting earnings after the close, just have not gotten it. So we'll take a look if we can get it after I go through the SPGI earnings. If it's there, we'll do it together. If not, it'll have to be for a different day. But waste management, definitely one of my favorite defensive value stocks in the entire market. We're going to be covering those earnings. Then we're going to go over our major indexes in terms of our technical analysis, our major tech names, and lastly, take a look at my portfolio and see how we started positioning for the week. So without further ado, guys, let's get right into it. SPY down 0.04%. You can see what a heck of a reversal it was pretty much at the end of the day. QQQ just the same, down 0.39%. Big reversal into the end of the day here. We're going to look for hourly oversold conditions potentially into tomorrow. Depending how CPI goes, there may be an opportunity for a short trade on QQQ, and I'm going to be using the Nasdaq Futures for that one. So we'll go over that short trade idea when we go over your technical indicators here for the market. In terms of your broad market performance here, guys, well, everything was fairly decent, right? You did have some very nice performance from the bottom half of the market, but you can see really most of the selling was in big tech and a lot of your semiconductor names coming down as well. The bottom half of the market, however, being fairly resilient. On the one-day relative, you can see that even better. Utilities, energy, basic materials, defensive, financials, industrial, cyclicals, and healthcare, all in the green. Your bottom half of the market, the ones that got the least love over the past month, and your underperformance for the day, communication services and technology. Communication services obviously led down by Google here, right? So before we get into more technical analysis, let us go over the one earnings play that is prepared for you guys right now. We're going to go over SPGI, and you guys know that I've been talking about this one on the channel, not only this one, but a lot of stocks in the data analytics segment of your financials market. SPGI is one of them. Moody's is another one. And the third one that I really love is MSCI. We covered their earnings a few weeks ago when they came out with theirs. But any which one of those three companies, guys, is pretty much a no-brainer buy in my opinion. So S&P Global came out with earnings last Thursday after the close, and they had a significant drop here. We're talking after earnings upon the open, they were down almost 8%. And they did have a little bit of a sell-off today as well, coming down pretty much 2% on the day. So what exactly happened on earnings here, guys? Well, they missed, but they missed ever so tinily. So let's take a look here, guys. They missed on EPS here by about 0.5%, by literally a penny, guys, almost 1-2 pennies. So not that big of a miss here on EPS. And the revenue came in mostly in line here. What I truly like about this company is a few things, guys. They have a very diversified business. They have extremely high profit margins for all their lines of business. They have revenue and EPS expansion. Revenue expansion is going to be about 6-7% through the next 3 or 4 years. EPS expansion should be over 15% per year for the next 4 years. They are free cash flow positive. They have low amount of shares compensation for executives and management, which is what I love to see in a company. And they have an extremely wide moat. It's extremely difficult for new participants to enter this market. If you don't know what they do, they have a couple different lines of business. Number one, they have the S&P suite of ETFs. So anything with an S&P handle in front of it, they are going to get a percentage of the management fee, obviously. Number two, they have a data analytics business whereby they provide data for financial corporations, investment banking, private equity, and the like. So very, very good insights that they're able to provide for other financial companies through their data analytics division. Very profitable division. And number three, they obviously have a ratings agency. So them and Moody's are known to have pretty much the biggest moats in terms of ratings agency. So we're talking about anything from the range of government debt, corporate debt, municipal debt. All of that debt needs to be rated, and companies and government entities pay high fees for having their debt rated. So very nice business as a whole here, guys. So in terms of the technicals, I've always stated that I really love SPGI 360 down to 321. Now that was during a period of a broad market sell-off. Now we're gonna have to readjust the levels a little bit, guys. If we can get as close as possible to 400, I will be looking to add more shares, just looking for the monthly breakout, retest, and run into 2024. Nothing wrong with this business whatsoever, as we're going to showcase here when we go over their earnings. Really like it down below in the 400 level. Full disclaimer, I do have about 12 shares of SPGI in my long-term portfolio, so I will be looking to add some the closer we get to the 400 level. Now, take a look, guys, at their margins. You can see here, ever expanding revenue over the past 5 years. Their net margins are extremely good, always ranging the high 20s, even 30% range. Right, so their financials are very, very, very solid. You can see here, ever expanding EPS to the tune of about 15-17% for the next 4 years, and ever expanding revenue as well. And the company's valuation is not so bad. If you want to take a look at their valuation, we can do that right now before getting into most things here. So if we take into account their most recent reported earnings, actually, let's do it on a forward basis since we're going into 2024. So let's just divide their share price, 430 right now, divided by your 14.10 estimated EPS. That's a PE ratio of about 31. 31 in the company's history is about standard. So they're not cheap, they're not expensive. This is really standard with the company's historical PE ratio. But keep in mind, they do have a 17% EPS growth rate, which puts them at about a 1.8 PEG ratio. Not too bad. Anything between 1 and 2 is fairly decent. Obviously, under 1 is the best case scenario, but 1.8 for a company so solid, right? Such a solid company like SPGI, such high margins and whatnot. I'm not opposed to be paying that valuation for the company, even at the current price. If we do get an extra discount here, talking about maybe an extra little 5, 6, 7% discount here down to about the low $400 range, it'll pretty much be a no-brainer pickup for me. So let's take a look at some of their metrics here, guys, and you'll understand why I love this company so much. Take a look at their lines of business, delivered strong revenue growth in 2023. Take a look, their market intelligence sector, right? So this is going to be 7% revenue growth for 2023. Look at these operating margins, guys. 33% operating margins. Extremely good. This is their data analytics division that they provide market intelligence for other financial entities. Then they have their ratings business. So as I was explaining, where they rate companies and governmental debt. That has been up 9%. Look at the margins on those. 56.5% operating margins. Absolutely insane. Then they have a commodity insights division, which is largely like their market intelligence division, except it provides insights on pricing power of commodities, right? So anything like gold, silver, oil, stuff like that, right? 10% revenue growth, 46.1% operating margins, absolutely insane. Then they have a mobility division. This is a relatively not new, but new-ish division for S&P Global, 10% revenue growth and 38.8% margins here. And if you don't know what the mobility division is, let's just take a glance at their website. So S&P Global Mobility enables customers to anticipate change and make decisions with conviction. We help them optimize their business, reach the right customers, and shape the future of mobility. Leveraging technology and data science, we provide unique insights, forecast, and advisory services spanning every major market and the entire automotive value chain. So this is the leading provider of automotive data analysis and insights here, right? So take a look at this, guys. Our solutions are used by nearly every OEM, nearly every single original equipment manufacturer, namely car manufacturers. More than 95% of tier 1 suppliers, media agencies, governments, insurance companies, and financial stakeholders provide actionable insights that enable better decisions and better results in relation to your automotive data market. So very good segment for them as well. High margins, high revenue growth. And then you have your indices business, which is basically just collecting premium every time you or I trade one of the S&P labeled products, right? So this is up 4%, extremely high margin business as well. That's why I love this business. Not only are they diversified, extremely high profit margins in every single segment, they just continue to grow revenue every single year. So here's your fourth quarter financial results. You can see here revenue steadily up, and as we were seeing, guys, all of their lines of businesses expanding as well. So very, very good jump in revenue here. What I just wanted to show you guys a few more slides as well. This is just giving a breakdown pretty much of every single one of their lines of business, but we're going to go down here to the 2024 outlook and guidance. So you can see here that a major component of their business is in terms of rating debt, right? So here you can see January 2024 global refinancing study. 12 trillion of global corporate debt maturities expected over the next 5 years, up 11% compared to the same study last year. What does this mean for them? It just means that there's more money in the pipeline that they're going to be able to rate debt. A lot of companies will have to reprice their debt, and they're going to go to S&P Global to get a rating on their debt in terms of being able to do that. So this is just a snapshot just to say that they have a lot of potential money in the pipeline for their debt rating business. Now, their 2024 GAAP guidance, great revenue growth here for 2024, between 5.5% to 7.5%. I always forecast with 6%, so that's pretty much in line. We're gonna have some operating profit margin expansion here as well by about 500 basis points, which is very good, about 5% here on a GAAP basis, so that's extremely good. And you also have some EPS guidance to the upside as well. So EPS should be up here by about 9 to 11% year over year. So that should be very, very, very good as well. And you can see all of their divisions will be growing in the mid to high single digit numbers as well, while maintaining extremely high profit margins. Really, really love this company, guys. Nothing bad to say about it at all. So here's the full year 2024 outlook. We already took a look at this here, guys, but what I wanted to show you guys is down below here in your capital return. For the full year 2024, company expects to return approximately 85% of adjusted free cash flow to shareholders through dividends and share repurchases. So the board has authorized the repurchase of shares totaling up to $2.4 billion. Very, very good, right? They always generate here. You can see here, in 2024, they're expected to generate about $4.4 billion of free cash flow. That's slightly above what they have been generating in the past. Usually they generate about $3.5 billion in free cash flow. So nice little uptick here in terms of your free cash flow generation. And the last thing I wanted to show you guys here is their operating leverage. Operating leverage is denoted by the fact that they're increasing revenue by 12% year over year, while only increasing expenses by 3%. So it's costing them not as, right, they're increasing revenue, and the cost of increasing that revenue is significantly lower. So it means that the company is still having very, very positive operating leverage. This is a telltale sign that a company is in very, very good position. And the last thing I wanted to show you guys, keep a look at their revenue right here. So let's call it about $12.5 billion. And let's go down to their shareholder compensation, which is why I like showing you guys here the stock-based compensation, right, for management and executives. So stock-based compensation, this is in millions, only $171 million. That is nothing compared to companies like we've seen over the past couple of weeks, right? Most notably Cloudflare, symbol ticker NET, and then Google, right? This company has very little shareholder stock-based compensation, for management and executives. 171 million divided by $12.5 billion. That's only about 1.3% of the entire float at this point in terms of stock-based compensation. So very, very low amount of stock-based compensation. It's just another positive box that I can tick off for this company as a whole. Very, very good. And when you saw, right, they're doing about $2.4 billion in share buybacks. So the amount of share buybacks largely outweighs the new stock-based compensation though. So that's exactly what you want to see all the time. Beautiful company, decent price. I would like it more about around the 400 area. Nothing bad to say about the company at all. I will be heavily looking at this one for a dip. As I've been saying, guys, SPGI, Moody's, or even a company like MSCI, they all do relatively the same business. MSCI just doesn't have the ratings business like Moody's has or like S&P Global has, right? But any which one of those three companies, it's so difficult for new participants to enter. These companies make so much money, and their services are an integral part of the financial world at this point. They're not going anywhere. These are set it and forget it stocks that usually outperform the S&P 500 every single year. Now, that's it for SPGI. So let's take a look. Has Waste Management come out with their earnings? I don't think so here, guys. So just wanted to show you guys that, right, we're on their website. still no earnings from Waste Management. But why did I want to show this company to you guys? A couple different reasons, okay? So number one, we had a nice accumulation range over the past 2 years pretty much. Now we're getting a breakout. So we're looking for the breakout retest of the range, and that's why I was heavily looking, can we get a little dip after earnings here, potentially on a bad earnings for them? If we can get a dip closer to 175, this is a no-brainer purchase for me, in my opinion. If you don't know what Waste Management does, guys, it says it in the name. They do waste management, right? So garbage disposal services. So obviously this company is an integral part of the US economy as we know it. Very, very large business, very, very wide moat, very tough for new entrants to get into that business. The valuation is not that bad. Let's just go over a few metrics right here. So you can see that their EPS, ever expanding EPS, but take a look, guys, they're now really starting to ramp it up. You can see EPS was largely flat here from 2018 to 2021, but now 22, 23, 24, 25, 26, the exponential ramp is starting once again as the company's been doing a great job of managing their costs. They had heavy capital expenditures in 2020, 2021, 2022, expanding their network, more trucks, more trash removal, warehouse facilities as a whole, right? Now that they've spent that money, now's the time to earn the profits on the money. And you can see ever expanding revenue curve here as well. This company is a no-brainer, just like MasterCard and Visa, simply just goes up pretty much every single year. They really had a turnaround of their business after the great financial crisis in 2008, 2009, restructured their business, running a leaner business, and now their market share is just absolutely ridiculous. I love this company. Just a no-brainer investment, in my opinion. I was just going to look for their earnings, but unfortunately, guys, we don't have their earnings. And here's your outperformance, right? Ever since 2014, the company has outperformed this black line, which is the S&P 500, outperformed it very, very nicely. You can see here S&P 500 over the last 10 years, right, is up about almost 200%. Let's call it 170, 180%. Waste Management pretty much almost double that. So really a company that outperforms the market. Very, very solid business, solid fundamentals, nothing wrong with it at all. So now let's go over the technical analysis for our major indexes, shall we? So SPY down on the day. So what needs to be notable to us, guys? Yes, we're in a daily uptrend right now, but what we're just saying, when this move tops out, look for the daily higher low, anything above 482.20, looking for the daily higher low for potential further trend continuation. Now, if you do get the pullback, target this 12 EMA and your previous line of support, 492. Nice little pocket area here of confluence. But we were looking, when are the bulls going to lose the hourly trend? They haven't lost the hourly trend since pretty much the end of the January. This was the Fed day, right? So we haven't lost it over the past 2 weeks pretty much. But now the bears coming in with the hourly trend shift. So loss of the higher low right here, potentially looking for the hourly downtrend. If we get the hourly downtrend, it's daily consolidation underway. So the reason why I'm looking for a short trade, most notably on QQQ, is a very simple idea, guys. We've been looking for the top of this cycle for a while. We do have our seasonality coming in over the course of this week as well. CPI could be the one thing that pushes us up back a little bit more tomorrow, set the lower high, and into the potential rollover over the course of the week. Now, very simple trade idea, guys. I'm looking for the lower high, for lower low continuation, to be looking for this to be your top, and then looking for daily consolidation. So the risk to reward is very, very simple, very, very simple idea trade. If we take SPY, for example, right, just looking for the hourly lower high, pretty much 502 would be a great level for that. So you take this, if it hits 502 right here, I'm going to be taking a short entry. We're going to do it on the Nasdaq, but the idea is the same for the S&P. We're going to be looking for a short entry here. The stop goes above the all-time high, and the logic is as follows. This is either your hourly lower high into daily consolidation, or you're simply wrong and the market will just continue. But if the trade is correct, we're looking here, right? If we take it to the 502 area, your stop loss is only about $1.50 to the upside. But downside continuation could bring us down into the 495 area. So you're looking at about $1.50 worth of risk, and downside potential from 502 is about 595. It's about $7 of profit to the downside for $1.50 worth of risk, right? So over 3-to-1 risk to reward. That's exactly what we're looking for. That is what I look for in my short form trade opportunities here when I'm looking to play futures. We're looking to play potential tops of the market, really looking for this hourly rollover. And if you don't get it, guys, you're wrong and the market just continues. We can try this trade at the same time. But when I try to enter this trade, I look for the loss of the hourly time frame into potentially lower high into lower low conversion, into daily consolidation. That is the wider move that I'm looking for here. So we're trying to snipe daily consolidation, and we're using the hourly time frame as our guide to enter that trade. Now, let's move on to QQQ. Same thing. QQQ bulls in full control still, right? Any consolidation, just looking for a daily higher low, anything above 416.64. Need to look for the daily higher low for further trend continuation. Where is support coming in? Well, support's going to come in right here, guys. Previous resistance, right, roughly 428. And you also have your confluence with the 12 EMA right there. So bulls are still in full control of the weekly as well. But still, guys, we've been in overbought conditions now for quite some time, for a couple of weeks. We're leading in to our seasonality. Obviously, these things don't always have to play out, but when you have such overbought conditions on your indexes, overbought conditions on big tech and semiconductors as well, could just be due for a little bit of a cool down. And that is why I'm going to be fairly cautious here and potentially look to take a little bit of a short hedge. On the hourly, it's just the same. You can see here the bulls losing the higher low, setting up for a potential hourly downtrend continuation. I will be targeting potentially these moving averages, right? 436 on QQQs, excuse me. And if we take into consideration our futures chart here, I'll give you the exact levels here for the Nasdaq Futures. I'm looking for a little bit of a bounce relief rally in terms of if we get bullish CPI numbers, could have a nice relief rally here into about 17, let's call it 17,950, right? This is going to be your previous support, which is now resistance, and your moving averages are right here. So going to be targeting 17,1950. Take the short opportunity potentially here if it's looking good. Your stops go right above the highs right here. Let's call it $18,050, right? So your risk is pretty much 17,950 to 18,050, 100 points of risk. But where's your reward? Your reward, we're looking to set the daily higher low, and your first area of big support comes in right down here at about 17,600-ish, right? So you have about 100 points of upside risk. But if we get the trade from 950 down to 600, that's about 350 points of downside potential. So that's pretty much a 2-to-1 risk to reward, right? We're risking about 100 points to the upside, and then we're trying to make 300 points to the downside if we're correct. At that point, it's a 3-to-1 trade, and that is a very juicy trade opportunity. So that's how I look at trading some short-term futures opportunities here. We either get the hourly lower high and get hourly downtrend and daily consolidation, or we're simply wrong on the trade and we just V-shape to all-time highs. That is the unlikely scenario. So we're trying to go with the likely scenario. If it doesn't play out, we'll just continue in overbought conditions. That's fine. But this is how I look for my hedge trade opportunities. It's all based on the loss of the hourly time frame control from bulls to bears. So hopefully that is helpful. Just want to reiterate, this is a counter trend trade idea. The bulls are obviously still in full control. We're just looking to play this little bit of daily consolidation here, potentially playing into some wider consolidation. If that ever materializes into wider consolidation, just looking for a weekly higher low on all these things, guys. Anything above 396, just for a weekly higher low for further trend continuation. If we really start dipping hard here, guys, break through our support, potentially roll over on the daily, this is when I usually take profit on about half of my futures position and let the other little bit ride for even weekly consolidation. That's when the returns get very juicy. So we're looking for daily tops and potentially even weekly tops with this trade idea at the same time. Now moving on to XLF financials. XLF looking fairly decent here, guys. Still caught in our sideways range, but now breaking slightly bullish to the upside. A break of 39.41 would definitely just break that to the upside here. Daily uptrend confirmed, reconfirmed by the bulls. This has been such a nice daily bull flag here, guys, right? Really love to see consolidation at the top of the move, using your 12 EMA as defense. Everything looking very bullish for your markets here in financials. Weekly uptrend is gorgeous at this point as well. Ever so slightly overbought on the RSI too, so we have to keep that in mind. But so far, so good. Bulls are in control. Where do we get nervous? If we start losing these lows right here, 38.57 is going to be a very big level. If we lose that to the downside, potentially setting up for the daily downtrend into weekly consolidation. And then, guys, very, very simply, our area becomes 38 down to 37.50. Very juicy spot, but that is still a significant ways away, guy. We're talking about 3-4% to way to the downside. As of now, bulls still in full control. Financials looking good. So if QQQ does have a little bit of a breather here, just because it's in overbought conditions, tomorrow, if we get good CPI and rates Rate speculation here on the 10 and the 20s continue coming down. Even if QQQ comes down because of overbought conditions, financials can still have room to move to the upside. Now moving on to healthcare. Healthcare looking good, consolidating sideways, right? Just setting up a daily bull flag, trying to go and touch this 12 EMA right here. Healthcare looking extremely good here, guys. We're just looking for the daily higher low, anything above 137.31, daily higher low for further trend continuation. And even XLV has some room to run here, guys, right? Weekly uptrend confirmed, leg number 2 of your weekly expansion. And we're now freshly above your previous all-time high. So everything looking very, very good on healthcare. No red flags whatsoever. As you can see, the hourly downtrend hasn't really been maintained by the bears. As a matter of fact, the bulls are just reversing it now. So this was a very beautiful area of, even though it was a hourly downtrend, look, they're not even cutting the lows by that much, right? So that's how you know the bulls are in full-term control, short-term control as well on the 4-hour 12 EMA, yellow line, just continuously protected. But look how much they've protected this ever since that November rally, right? So it's looking good. Bulls have everything in the wind at their backs right now for XLV Healthcare. Now, IWM Russell. IWM Russell really going against the grain here, guys. 1.82% to the upside. And that is once again here, guys, on a day where yields were slightly on the uptick, right? So we have a red candle, but we were still up slightly on yields for the day. And IWM Russell just saying, you know what? I don't care at this point, just really going for it. So it will be nice to see an IWM Russell close above your 200 level of psychological resistance, but also this big area of resistance in the past year and a half. So it would be really nice to see them close a candle above this area. Would really give us a beautiful new weekly uptrend continuation to be looking for your market bulls. Bulls have now engulfed this previous move. So as soon as this move is topped out, just gonna be looking for the daily higher low for further trend continuation. Now, if we can mount significantly further above this area, this whole area, this red box now 201 down to 194 becomes beautiful support, breakout, retest of the zone for a potential new weekly leg higher. But everything is going very good. We had a tightening range going, but now the bulls really breaking it to the upside, going for the potential monthly continuation here, right? So this was a very beautiful monthly consolidation area going for the breakout above. Remains to be seen how the week will close. Would like to see them close above, but keep in mind, once again, we have the seasonality come in. IWM has run a significant amount contrary to interest rates here over the past couple of days, up 6%. Not overbought just yet. We just need to keep an eye on this one for sure. But your bulls looking good now. They've created a lot of space. IWM definitely going to be one of my names to watch here. If for whatever reason we close above, breakout, retest, I'll have to be buying in this area, but I want to see how this week closes, because if we start reversing, guys, I wouldn't be opposed to seeing a retest of the lower 190 range. And if it does dip down back to the lower 190s, I will be starting my IWM position that I've been putting off here for about the past 2-3 weeks. Now moving on to lastly, our Dow Jones. Dow Jones 0.33% to the upside, looking fairly decent, not gonna lie, right? 0.33% to the upside. Very nice defense of your 12 EMA here. Daily bull trend just simply continues at this point. Any move lower, just going to be looking for a higher low, anything above 38,220, just for a daily higher low for further trend continuation. But the Dow Jones, you know, may be getting a little bit tired. Yes, over the past while, we've been doing a great job of cooling down, excuse me, you can't see that, cooling down your daily RSI levels as the move since here has been fairly muted, right? Not as an aggressive move as you had right here. So good job cooling them down. But the weekly, guys, the weekly is now in a severely overbought condition. So we will eventually be looking, if we do get a break here of this daily 12 EMA and loss of your daily structure in terms of a daily downtrend set by the bears, just going to be looking for weekly consolidation, anything above 37,150. Very healthy weekly consolidation for further uptrend continuation. So really a lot of pressure on this week here, guys. Seasonality, CPI tomorrow. The markets just continue rallying at all-time highs. So could it be time for a little bit of a breather? Well, we'll have to see. It's up to the bears to prove it to us, because as of now, the bulls still control all of your dailies and all of your weeklies. So we need to monitor the rollover as it occurs one day at a time. Now let's get into a bit of crypto, because crypto is pulling off a significant run here. So about 6-7 days of green in a row for Bitcoin. Bitcoin, severely overbought conditions on the RSI, but it is crypto. This can last for a while. So beautiful daily uptrend set by your Bitcoin bulls. Now eclipsing our previous 52-week highs. So at this point, any pullback on this move will just be looking for a daily higher low pretty much. Anything above 42,000 will just be looking for a daily higher low. And now this whole area, 46, 47, just going to be acting as newfound support. If we do dip back there, getting to the closer end of the top end of our resistance area, guys. 52,000 is the top end of this supply zone. So will we get rejected before then and potentially start resetting a little bit of structure towards the downside here and even pulling back on the weekly, or we will just continue past that, mount it, and then have a chance to set this as support? Going to be looking very closely at these Bitcoin and crypto developments, but everything looking very smooth, even on the weekly here, guys, right? After having lost the weekly lows, the bulls pull off the ever so unlikely V-shape. Very beautiful move by Bitcoin bulls, and your monthly trend continuation just continues to the upside at this point. 52,000, very big level. Moving on to Ethereum. Ethereum performing very beautifully as well, right? Daily uptrend simply continues by your bulls at this point. Contrary to Bitcoin, Ethereum never lost your weekly lows. Always was defending this 12 EMA as weekly support. Never lost the weekly lows right down here at about 2135. Looking very good. Weekly trend continuation just under motion right now. Ethereum resistance still stays put, guys. 27,000 is going to be a very big level. If we crack that to the upside, guys, well, the next target, we're going all the way up to pretty much 35. There's no big areas of resistance pretty much before 35. If we get above this little 2,700 zone right now, going all the way to 35, that could be a very beautiful move on Ethereum. Bulls in full control of the daily and full control of this point of your weekly time frame too. If we do choose to take a little bit of a breather, we do have a very big chop zone coming back down here. And if not, your lower level of support, guys, pretty much $2,400 is going to be a good level, but you have to get through this 2,500 first, right? So bulls have done a good job here of creating a bunch of levels of congestion if ever we pull back, right? So very good move by Ethereum bulls. Congratulations to all the bulls out there. Now let's move in to our major tech names, and then we'll do my portfolio. So we're going to go over these very quickly since not much has changed. So Apple still looking to eventually set your daily higher low, right? Daily downtrend was recaptured by the bulls. They tried to set the daily higher low, but eventually flushed. So now the pattern restarts from zero. How much of this downswing can the bulls recapture to set the daily higher low? Well, as I've shown last week, guys, the bulls have recaptured a decent amount, over the required amount to have a good chance of resetting the daily uptrend. They recaptured the 618 level, so that's very good. Now we're going to see, can they set the daily higher low, can they set the daily higher low for a daily trend change, for the first daily trend change, official trend change back to the bulls since pretty much your mid-January session, right? So we're going to see if that happens, but if for ever which reason Apple just falls through here on some weak seasonality, I will be looking to buy Apple 180 down to 175. My sweet spot represents very big area of weekly support. Apple still in just a weekly tightening range at this point and a monthly tightening range at the top. Apple does this a lot. I keep bringing up this example, right? Nice move up, consolidation range at the top. Nice move up, consolidation range at the top potentially as well. So I will be looking to Apple in that respect here, but bulls still need to change this eventually to a daily uptrend. Still not above our previous area of resistance, right? 190 to 187.50, proving to be a harder than expected area for the bulls to get through. So may need to retrace a little bit, then take a second stab at this area. But if we come over and mount this area, going to be looking very good for some potential weekly continuation to the upside. But as of now, still just stuck in a tightening range. Now, AMD, so semiconductors as a whole, guys. Before we get into AMD, I just want to show you semiconductors as a whole, right? So semiconductors slightly overbought, and you do have a little bit of divergence, right? So tops, right? And here's the tops on the RSI. So bearish divergence. The price, the higher highs are going higher. The RSI higher highs are going lower. Usually price tends to correct in the direction of your RSI. So could be due for a little bit of downside after such a significant rally. Just looking for a daily higher low for further trend continuation. Weekly is also significantly overbought. So at the same time, if we do give a little bit back on the daily here, well, it'll just be daily higher low. Anything above 164 on semiconductors ETF, going to be looking for just weekly consolidation at this point. So goes without saying, AMD, one of your semiconductor plays, still consolidating sideways. So AMD actually consolidating nicely as opposed to some other ones that have really started dropping off. But AMD looking to maintain this tightening range above your previous all-time highs, which it has been using as support. That is the 164 down to about 158. Now, whichever way this range breaks is going to be very, very crucial for AMD. If it breaks the range to the downside here, yes, we have previous all-time highs as support, but if we break, this would be daily downtrend confirmed. Any break below 165.72 is daily downtrend confirmed and just continued weekly consolidation. You can see AMD now for the past 3 weeks has been consolidating at the higher end of these levels. That is what you want to see. Beautiful weekly uptrend, sideways consolidation at the top end of an entire move. Best case scenario, it is a weekly bull flag, right? For further trend expansion. But if for ever which reason with negative seasonality and semiconductors, if they pull back hard as a whole, then guys, we're just looking for a weekly higher low, so much space, anything above 134, weekly higher low. And if we do get into a little bit of more of weekly consolidation at the same time, it'll just be very healthy monthly consolidation, maybe into February, late February and early March. Wouldn't be opposed to a little bit of a pullback here on AMD before maybe gaining the levels further into 2024 as they finally start adding more EPS to their bottom line. But I did not like their most recent earnings report, just because most of this move has been generated by hype and speculation and not an improvement in their fundamentals. I'm not saying this is still one of my favorite plays here, guys, for the next 3 to 5 years for any semiconductors. It's just that these prices with the fundamentals they have now, little bit rich. So I would not be opposed to a retest, but still bulls playing good defense of the 12 EMA remains to be seen. If they lose this, we're just in for further weekly consolidation. Your levels 164 to 158, and then we're going to be looking at 146, which is a pretty deep cut, but nevertheless, that is the next area of support. Now moving on to Amazon. Amazon pulling back here on the day, 1.21% to the downside, but Amazon so much space here, guys, right? Daily uptrend simply continues at this point. Just looking for a daily higher low, anything above 168. Just looking for a daily higher low for further trend continuation. And Amazon just dealing with overhead resistance at this point. Overhead resistance is going to be pretty much 178. And then your all-time highs, 188 for that spike. But a long time, Amazon was stuck pretty much at this 177 level. It actually wasn't 177 back here. It was about $3,500. For those of you that remember that, Amazon was very rarely able to get above that. Stuck there for about a year and a bit. So now Amazon looking very good on the daily, but if for ever which reason, in terms of downside expectations, if for ever which reason we lose the daily higher low right here and set up for a potential daily downtrend into some weekly consolidation, Amazon bulls, tons of space, anything above 144.51, very nice weekly higher low for further trend continuation. And if Amazon pulls back down here, starts filling some of this gap, I will be looking to play Amazon aggressively here in the $160 range. Now moving on to Google. Google as well consolidating a little bit today, 0.99% to the downside. So is this daily move topped out? Well, let's take a look at the hourly. They just lost the hourly trend to the bears at this point, right? So if we continue in an hourly downtrend into tomorrow, just going to be daily consolidation. Now, they put in a significant bounce after the drop on earnings. Let's take a look at how much of a bounce have they set. Over 61.8%, right? So about 70% of the move. That gives them the best odds possible to potentially set a daily higher low and recapture this daily uptrend. They lost the daily uptrend here when they put in the lower low as opposed to our previous low. Now we need to reset this daily uptrend. So since we lost the daily uptrend over here, this has been weekly consolidation ever since. We were always looking for a weekly higher low. Anything above 137 was your weekly higher low. Got it. Now just in a little bit of consolidation, but the bulls, guys, are very healthy on Google. And even in your long term, you can see this as well, right? Monthly uptrend is more than set at this point. So no red flags at all. But if we do pull back, guys, it's going to be a juicy buying opportunity. If we can pull back below 145 again, I will be shopping for Google. 143 down to 141, aggressively writing on the puts because we have such massive support down here in the 141 to about 138 level. And obviously your area of resistance, guys, well, it was the area we were just at before earnings. All-time highs, 154 pretty much. But Google looking healthy, should be looking daily higher low. I want to enter positions here for the potential move higher. Now moving on to Meta. Meta, 0.17% on the day. They were a bit higher, right? But giving up most of the gains intraday. So Meta still consolidating sideways after their massive earnings move. Now, psychological resistance is still going to be put up here at about $500, but everything looking very good here, guys. If ever which reason we lose these lows, 455. This is the one scenario watch out for, okay? Healthy daily uptrend. If we lose the lows here, it will be lower low, lower high, lower low, daily downtrend. At that point, guys, very simply, just look for a weekly consolidation. Anything above 336, just looking for a weekly higher low for further trend continuation. So Meta still overbought on the weekly, still overbought on the daily. So it could just be some time for a lot of these tech names, right, which were overbought on a lot of your short-term indicators to be pulling back. Take a look at them. Apple was never, because it's stuck in a range. AMD was definitely overbought on the daily, still overbought on the weekly. Amazon as well, overbought on the weekly after their earnings, slightly overbought on the daily as well. Google, no, because they dropped after earnings, but Meta, you can see this, and we'll go down the list, guys. The list just continues. Overbought conditions across most, if not all, of big tech here, right? So Meta, just keep an eye on that daily downtrend. If that does happen, markets will just consolidate sideways here. It'll just give an opportunity here for your long-term bulls to be buying the dip. And the next area of support, guys, 382, significant ways away. So Meta with tons of space to be able to pull back and still look fairly healthy. If Meta reapproaches the lower $400 area, that's why I will be making plays myself. Now moving on to Microsoft. Microsoft pulling back here today, 1.26% to the downside. And Microsoft has something that Meta does not. Microsoft has a little bit, guys, a little bit of bearish divergence right now, right? So you see lower highs on the RSI, higher highs on the market. Usually the price does tend to correct in the direction of the RSI. So we may be looking ahead a little bit lower here on Microsoft, but that's okay. Microsoft with a very wide cushion, beautiful daily uptrend, anything still above 403.22, looking for the daily higher low for further trend continuation. But if we roll over, just going to give you guys the expectation. If we roll over into a daily downtrend, that's fine. Looking for a weekly higher low, weekly overbought conditions, anything above 365, just looking for a weekly higher low for further trend continuation. Just very healthy consolidation potentials on a lot of big tech names here, guys. But like we've been saying, could be approaching some top areas. That's why I give you guys the worst case scenario, just so you guys know that the bulls are in full control of your higher time frames, okay? Now moving on to Netflix. Netflix still consolidating sideways after earnings, right? So even names like Meta, right? Meta can consolidate sideways for, like Netflix has been for the past couple of weeks. No objection to that whatsoever. And even like AMD, right? AMD, after such a magnificent move to the upside, sideways consolidation for the most part in a very wide range. Netflix, very, very tight range, right? So Netflix still dealing with this resistance area, 575, the top end of the range it was stuck in between, about a year and a half, 2020, all the way through 2021. Still dealing with the top end of that. But what has this allowed us to do? This sideways consolidation allowed us to cool off your daily RSI, but the weekly RSI is still ever so slightly overbought. So now at the current time, guys, daily downtrend is in motion. We'll see if we flush these lows, 555.57 over the next few days. Daily downtrend continues, weekly consolidation continues, and anything above 461.85, just looking for a healthy weekly higher low for further trend continuation. If Netflix dips down anywhere close 520 down to $500, that is where I'll be playing Netflix personally. But as of now, bulls in full control, weekly uptrend, just healthy consolidation. And even on the monthly, guys, you can see this, right? Beautiful monthly uptrend as well. So if we get a little bit of pullback here, end of February, early March as well, I will be looking to buy the dips on Netflix, 520 down to 500. Now, NVIDIA, gap up open here. Very, very juicy, right? 746, almost 750, absolutely ridiculous. Before pulling back significantly into the end of the day, right? 3.5% almost top to bottom on the day. So could this be a temporary top for NVIDIA? We will see, but they have earnings next Wednesday. So coming up fairly quickly for NVIDIA. We'll see how high or how much of a pullback they can have before earnings. But as of now, price action, guys, no resistance to the upside because we're at all-time highs consistently. 750 first area, psychological number, and then 800 going to be your second psychological number on the daily. Take a look at the hourly trend, okay? So now the bulls have lost the hourly trend, but NVIDIA can do this. They lose the hourly uptrend, and the very next day they reset it. So we'll see, can they reset it tomorrow? If they lose it into tomorrow, it would be significant because NVIDIA, that would be the first time they lose the hourly trend for 2 days in a row since pretty much all the way back here, mid-January, end of January consolidation at our previous level. But still, anything above these levels now, any pullback, just looking for a higher low, anything above 604.50, higher low for potential further trend continuation here, guys. NVIDIA still looking very bullish. No red flags. The bull red flags arise when you set the lower high, lower low pattern. Then you know the stock is potentially due for further extended weekly consolidation at that point, right? But so far, NVIDIA still looking fairly good. It's been in overbought conditions, guys, this entire rally up, where if you would have started shorting this when it first got to oversold conditions, you would have went short 531 and you'd be stuck up here pretty much $200 higher, which is why you do not short on one indicator alone. Need to wait for the pattern to break down and need to wait for that to be showcased by your bears recapturing some of these lower time frames, right? Hour, 4-hour downtrend leading into potential daily downtrend. And then only then can you get a wider weekly pullback move. Now moving on to Tesla. So Tesla down 2.81% on the day, right? So down to about 188. So Tesla had a significant bounce. We were looking after the significant daily downtrend, right? We were looking for when will the bounce occur, and that would be in a change of the hourly trend. Now, we got the hourly trend at the midpoint of last week. Hourly trend was nice, but just once again lost it into today, losing your previous higher lows, right? So hourly downtrend started, which means unfortunately your 4-day daily bounce is now finished. The bounce was juicy. Measure the bounce in relation to our previous lower high, which was right here. The bounce got up, about 78.6, almost 80% of the move. So the bulls have a good opportunity here to set the daily higher low for a daily trend change. So we're going to be looking at that closely, but with the size of this weekly move down here, guys, very possible we just get continuation. If we do get continuation, if the bulls are not able to manifest this bounce into a daily trend change, then we will be retesting these lower lows, just continuing our weekly downtrend at that point. And we're going to be looking 180, 170 horizontal area of support and the bottom end of your downtrending channel line. So just keep an eye on that for Tesla. Crucial next few days ahead of us. Can we set the daily higher low and daily trend change and get more of a weekly bounce going? Inflation is going to be huge for that tomorrow here, guys, because if inflation comes in good, interest rates will go down, and Tesla, being an interest rate sensitive stock, may just benefit from a little bit of a rally, potentially being able to set a daily uptrend here, going counter trend into the rest of the week. So we will see. Now, moving on to Palantir. Palantir still outperforming on the day, 2.75% to the upside. So the analysis on Palantir really doesn't change. Upside resistance target, guys, pretty much stays at $28. But you keep in mind, you have a lot of trapped equity ever since the IPO down here. So we could be encountering, 25, 26, 27, 28. It's a wide range. Could be just encountering a lot of supply of shares in this area as people look to get out of their shares that they had, potentially not knowing a lot about the company and their future prospects. May just be a lot of profit taking and a lot of profit taking from the people who are buying all the way down here, right? So big area of potential profit taking, big area of resistance. For now, the bulls still very healthy. Daily overbought conditions, however, so we will watch when we lose the hourly time frame in a significant fashion. When we lose the hourly downtrend for 2 days, then daily consolidation will be underway. Just looking for a daily higher low, anything above 16, daily higher low for further trend continuation on Palantir. I will personally be targeting for trades myself the lower end of this previous range right here, talking about $21.50, $22. Obviously still our previous 52-week highs of this past year as well. So should be representing a good area of confluence. It was resistance, should be now acting as support. So I'll be looking for that for a little bit of a weekly pullback when that occurs. $22 seems to be a good level for now, but daily bulls in full control. And now lastly, PayPal. PayPal up 2% on the day. Fairly good day, right? Now we're getting back above the range that I did not want to lose, 60 to about 57.5. Now, earnings, obviously a significant drop. We need to measure the size of the bounce. So we were in a tightening range, number one. Then we lost the range, and now the bears have an opportunity to set a lower high and lower low continuation of the downside. But the bulls still have a chance. The chance is in the size of the bounce. So how much have we bounced so far? 50%. Not the best, right? You want to get as high as the 618 level, and that would mean about $61.60, even up $62. If we can get up there, guys, the bulls have created enough space to potentially reset and use this yellow box here as potential support and reset a daily uptrend and start looking for those higher levels a bit further, right? There was a lot of hype and expectation going into earnings for PayPal. And when they issued, soft-ish guidance for 2024, that it was going to be a transition year for them, the market didn't really like it and coming down pretty much 11% on the day after earnings. But the valuation is good. Can't deny that. So we're still battling with our area of support down here, 60 to about 57.50. We will see if the bulls can put in a little bit more of a push, they can almost guarantee themselves at a good chance of setting a daily higher low, using this area as support, right? Daily higher low and recapturing that daily uptrend. We need to see a weekly break here, guys. Need to see a weekly close above 63.64, above our downtrending channel line to really get some of these higher timeframes engaged in the price action. Until that happens, guys, there are not going to be any significant moves to the upside, in my opinion. The significant moves really come when you start mounting this trend line, mount breakout, retest it, and then you can get a significant move. So still a ways away for PayPal, in my opinion. So that's pretty much everything ahead for you guys in terms of our earnings and stocks today. Let's go over my portfolio quickly. So taking a look at the portfolio here, guys, you will see that we are now profitable for the year-to-date gain. So 3.71% to the upside after having been trapped in a few names that were interest rate sensitive stocks and also China sensitive stocks. We have since been able to write covered calls on those positions. The underlying positions recovered and now we're called away. The account now has full buying power for new positions pretty much. So very nice recovery over the month of January. Wrote a lot of premium in the time being, and we will continue to just write premium in the next few weeks if the market drops. Gonna look for those juicy opportunities. Should be able to easily outperform our benchmark indexes here over the next couple of weeks and 2024 as a whole. But for now, 3.71% year-to-date gains. The QQQ as a whole, year-to-date, 7.2% to the upside, and SPY about 6.1% to the upside. So they are still outperforming us, but not for long, guys. We're going to catch up very nicely. Now, in terms of the positions here, guys, you will see that a lot of new positions for the week, but very, very conservative positions, even if you do see a lot of positions. So CSIQ still have those covered calls going on CSIQ. CSIQ now above $23, so could be at a risk of being called away by the Friday close, but we'll see how we're going to manage this position here, guys. Pretty sure I'll be able to roll for a credit for next week and just further reduce my cost basis on those. So those will be an ongoing monitor position. The new positions, let's get over them because I'm excited to talk to you guys about these. So GDXJ, we have the 33 puts, which we got for 40 cents over 1% rule. Now I went for this one, guys, for a couple reasons. I do believe that CPI will be a positive catalyst for the markets. I do believe that it'll trigger yields to come down slightly, ever so slightly a bit. And the dollar, since it's positive, since DXY, the dollar is positively correlated to yields, dollar will also be coming down. And when the dollar goes down, usually gold goes up, and usually your gold miners tend to go up as well. But this whole theory coupled as well with very beautiful weekly support levels at your 33 all the way down to roughly about $32. This area right here seems to be a very juicy sweet spot for the market, has been a sweet spot in the market for the past and should continue to do so as well. Really wouldn't mind owning the gold miners down here. So just was making the most out of that premium for the day. So we'll see how that positions progresses for the rest of the week. Now, the second trade is going to be PayPal. PayPal 57.5. So you guys know that I sold out of my PayPal position prior to earnings in roughly the $63 range. So now just looking to get back in the stock at the lower end of this range right here. 57.50 is going to be the mark. So we'll see if we get assigned on those by Friday. But as a whole, was able to get some decent premium on them. Not quite 0.5%, would be about 27 cents. But I like PayPal's price action today and figured, you know what, why not throw two contracts at the lower end of my range here, 57.50. So we'll see if we get reassigned PayPal at a significant discount from where we sold them from. So that was the logic behind that one. We also have a trade on ARM, very, very greedy trade on ARM, but not that greedy when you take a look at the percentages. So ARM, we have the 108 puts. So ARM, significant rally again here today. 30% to the upside, pulling a little bit back in the after hours. And you'll see, guys, the expected move, this yellow line is the expected move on ARM. So you'll see the expected move is down about 15% from current trading to about 125.50 for the Friday close. Now, I wrote the 108s, guys. The 108s is literally 27% away, almost twice the expected move, and would give back almost this entire daily candle today. That's a very unlikely scenario, so that's why I was willing to take the risk for that trade. ARM 108s, 0.5%, right? Pretty much over 0.5% for the ARM trade. So that's the logic behind that one. Fairly risky, fairly aggressive trade, but in terms of percentage pullbacks and percentage off the expected move, not that risky nonetheless. Don't mind taking this trade at all. BABA, we have an average down on BABA. Looking for the 71 puts for Friday. Didn't get 1% rule here, but just looking to average down on BABA and get some premium in the meantime. So BABA, we got assigned at $82. Our current break even is roughly sitting at 78.50. So I will be looking to throw potentially 100 shares. And the reason why I like the $71 strike rate is because it's right at the lower end of our support zone right here. If I do get assigned on BABA, I will not mind. I do want to accumulate as much BABA possible in the lower 70s to $60 range because I do believe they will be an outperform over 2024. So really don't mind going with the 71s. I got that trade a little bit late. It really popped on the morning, was waiting for it to come down. Really wasn't coming down. So I took the trade about midway through the day when it was about $73.50. Now, the premium has since ever increased from there to about 33 cents, but not that much here, guys. We're not that far off the 1% rule, off the 0.5% rule. So I didn't mind taking this trade as a whole, just looking to average down. Then we have the Datadog. So these are going to be some earnings plays, guys. And please, before I go through these, be extremely careful if you play earnings. And you'll see the way that I'm playing earnings. Hopefully it gives you an indication out of how to play earnings on a relatively safe basis. I still recommend never to play earnings, but in the way that I play it, guys, is fairly conservative. So I don't mind doing it on stocks that I want to own at prices that I don't mind owning them at. Very crucial step right there. So Datadog, you guys will see that we have the 110 puts for roughly about 0.5%, right? 0.5% would be 55. We got 60 cents almost for the 110s. Datadog has earnings tomorrow morning before the open. So Shopify, Datadog, and Coca-Cola. You'll see in the account here. All right, Datadog, Shopify, Coca-Cola, all for tomorrow morning before the open. Datadog 110s. Why? Well, it's significantly below the expected move. Datadog 135 at the close. The expected move is pretty much to the downside, about 121. So that's about a 10% move to the downside here to 121. I took the 110s, right? So significantly lower than that, around 110, when the 110 area is really a juicy previous area of support. It was resistance in the past, and you bring it all the way back here, guys. You can see resistance, 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 support, right? So I'm looking for the 110 to act as support with me, and that will be almost twice the expected move. Expected move is about 10% to the downside. We're about almost 18% to the downside off. So hopefully have enough cushion on that one. Would not mind owning it down here. That would be really pretty much getting it back to mid-November prices. Would not mind having such a nice discount on Datadog. So that's why I did that trade specifically. Coca-Cola 58s, got almost 0.5% for them. Not quite, but 25 cents for the Coca-Cola 58s. Coca-Cola, just based off of my Pepsi analysis from the other day as well, $58. The expected move down here is about $58.26. So not that much cushion, but you can see how well this $58 has acted as Coca-Cola for support. Support, support, support. Yes, it blasted through back here in October of 22, but the entire market fell apart as well. And we had that event back in October here, September, October, where a lot of consumer discretionary stocks came down after Coca-Cola and Pepsi issued renewed guidance to the downside for the next coming quarters. But Coca-Cola has since recovered very nicely, and I'm looking for them to protect this $58 strike. Do I mind being assigned Coca-Cola at $58 in such a beautiful area of accumulation? Absolutely not, guys. If you remember on the channel, we actually had the 55s earlier on when this whole was happening, and we were able to rebound from this nicely. So I'm expecting much of the same from Coca-Cola. Very defensive stock, nothing wrong with it. If I were to pick it up at $58, I really wouldn't think twice about the position. Now moving on to Shopify, we wrote the Shopify 72 puts for 32 cents, not quite 0.5%, but almost, and you'll understand why I took this one. Take a look at Shopify here, guys, right? Shopify trading about $90 today. The expected move for earnings is about 11% to the downside, $79.28. Where did I write my strike, right? Take a look, guys. Take a look at the strike, the $72 puts. So we're going to be almost twice the expected move. Expected move is 11%. We're going to 72, which is roughly 19.2% to the downside. Where are we targeting? We're targeting the 70 area, right? Previous resistance, previous support as well. So I'll be looking for this big area to provide some temporary relief if ever the stock really comes crashing down hard. But the goal of all these earnings is riding below the expected move. On the more volatile ones like Shopify and Datadog, we're almost going 2 standard deviations from the expected move, and we're highlighting big areas of support where I would not mind owning the stock at. So those are the key takeaways. That's going to be it for Shopify. Tesla, we also have the 182.5, so we got 81 cents for them on the morning. I should have waited a little bit, but I did give Tesla a chance to come down here on the morning. I took the trade roughly at the midday point. And at the midday, they're still pretty much down. I wrote this thing when it was down already in about 191 range, but then it unfortunately came undone over the course of the day. So we're going to be looking at the 182 strike, which is within my support range still. I would have liked to get 180 or below, but I went with the 182.50. Would not be upset at owning Tesla at 182.50 for a little bit of a bounce play here. Obviously, the contracts have come up significantly because the stock just dropped after I wrote them. Then Trade Desk, obviously this one has earnings for the week, so we'll remain covered into those earnings, but Trade Desk looking very, very good, guys, now up to about $74, providing us with a lot of cushion. Our break even is all the way down at 64.39. So the stock after earnings would need to drop like 12%. Our covered calls are at 71. So if it ends under 71, I just pocket all of this premium, right? $4.48. We just write new covered calls for next week. So we'll see what happens with that. Very, very happy. Low break even on this stock now. Very good position management. And the only other one that I added, guys, was a cheeky little play here on 20-year yields for your CPI tomorrow. So I went with a leap call on TMF. TMF is your 20-year bond play. It's an inverse to yields pretty much, right? So this is pretty much TLT, which is your 20-year bond ETF, but with 3x leverage. So I took a leap call position, right? After the stock's been down for a while. I do think that yields are nearing a somewhat of a short-term peak here in the 20-year. We've had a nice rally from December on them and whatnot, but I think that it's time to come down, guys, and just continue this weekly downtrend to the downside over the course of the year. So I finally averaged in to my TMF position. One leap call here. I did the 40 calls for about 18.25. Not that much. That's about an 82 delta, right? So fairly conservative here. And the premium is not so bad, right? I paid $18 above 40. So that would be $58 break even, right, on TMF. And where's TMF? Let me just pull it up right now. So it'll be an $18 move up on TMF. It would put our break even roughly around 58.25, right? So 58.25 is right here. So for a year's worth of time to only be paying a premium of roughly about 6%, 6.5%, not a lot of premium considered this is a 3x levered ETF. So very nice play on the covered calls on the leap call for me. And then lastly, guys, we added shares to the TMF position. So I'm not too sure why you can't see it in my order breakdown here where I added the shares, but just to show you guys that I did add the shares here today, we have a purchase of 30 shares right here, February 12th. That's today at $54.20. So now 60 shares total for our TMF position. Position size is about $3,300. May add a little bit more if the position drops a bit more, but finally starting to really build out this position nicely for the next 6 to 12 months. And that's pretty much it, guys. The rest is pretty much still standard. ETH and Bitcoin still have. Nike not high enough for covered calls, but recovering nicely back towards our strike price. Trade Desk went over. BABA we went over. CSIQ as well. My Canadian banking shares just got a dividend today. Very happy about that. We're now up to about 1,018 shares. So looking forward to that recovery, about a $20,000 position there as well. And we're up about 40 cents a share or about 30 cents a share on those from our average cost. So very, very nice recovery in the portfolio for the course of the week. So hopefully that was educational for you guys. If you enjoyed the video, I would really appreciate if you could drop a like. It really takes a second of your time and really helps the channel grow out. And as usual, guys, if you're new here, really, I would appreciate if you subscribe to the channel as well. We do these videos Monday to Friday after the close. We cover your major earnings, always cover your major tech stocks, major indexes as well, and your major macro news. And I always show my portfolios Mondays and Fridays. And as usual, guys, if you have any questions whatsoever, stocks, options, technical analysis, macro, anything whatsoever, leave it down below in the comments and I will answer you always within the first 24 hours. So take care. Hope you have a good day trading tomorrow. CPI, huge day tomorrow. Take care. Peace.